Okay, so picking up here and finishing off chapter 11, we talked about the employee side, so now we want to talk about the employer, because everything we took out of the employee's paycheck wasn't, an expense of the employer. I'm just taking those out and forwarding those on. But for every payroll, the employer has expenses as well. Besides just the salary, they have other expenses to pay. So let's talk about what those are. First, the employer also has to pay FICA. Remember, we said that was half and half. So they have the Social Security and the Medicare, and it's a half and half split, so that it's the same amount as what we paid for the employee. So what we calculated for the employee, that same amount is what the employer will owe as their Social Security, Medicare taxes. In addition, the employer has to pay unemployment taxes. So there's federal and state. So we have federal unemployment tax, which is FUTA, and we have the state unemployment tax, which is SUTA. And generally, the two of these together add up to about 6%. It varies by state, but generally, if one state is less, then those people have to pay more in federal, so that kind of adds up to the total. And the example that we use in the book is 5.4% state. That's usually the larger, and so then it's like 0.6% for the federal. So the two add up to 6%. So the state's always larger. The federal unemployment is usually really, really small. And they pay this on the first $7,000 that each employee earns for the year. That each employee earns. So at the beginning of the year, they're probably paying it on everybody, but after people have made $7,000, I don't have to per year. After that $7,000, I don't have to pay it. So it's got a cap, just like the Social Security had a cap. So let's do one again. We're going to use those same numbers that they gave us at the beginning. So we've got 6.2% for Social Security, old age, and survivors. We've got 1.45% for Medicare, and we said FUTA is 0.6%, and the state unemployment is 5.4%, and we had that cap of 117,000. But they're telling us here that nobody has reached the payroll tax limit, so for either unemployment or Medicare. So we're just applying those to the whole thing there. So we've got the debit will be to payroll tax expense. And I'm going to write that first because I always write my debit first, but I'm going to leave the amount blank. And then I have a series of payables. So I will have the FICA tax payable for the Social Security, and that will be 6.2% of the total payroll, which is $10,000. So that's $620 that I owe for that. If I had already done the employee side, I should see the same amount there. So then I'll have FICA Medicare tax payable, which will be the 1.45%. So that's $145. Then I will have the federal unemployment. So that'll be 0.6%, and they're saying everybody's still under the 7,000. So that'll be of the whole payroll there. That's a parenthesis. So that's $60. And then the state unemployment will be 5.4%. So that's $540. And so those are my four taxes. So I add those up, and my total payroll tax expense then is $1,365. And so that's what it looks like when I accrue it, and then when I pay it, I just debit each of the payables and credit cash. So I debit FICA payable for the $620, and then FICA Medicare payable for the $145, FUTA for $60, SUTA for 540, and then a credit to cash for the total, which is 1365. So that's really all there is to it. These two are, again, same as the employee, and these are probably, in a lot of the examples you see, that's only on part of the payroll. Sometimes they just tell you the total payroll was this, and 5,000 of that was subject to unemployment, and so you would just take these percents times the 5,000 or whatever they tell you. Here's another example that I wanted to show you as a payroll. So number one, it's a more complicated one, but the other thing is it's a good example of a payroll register. So this is what an employee would keep. And so each one of these are different employees, right? So employee A, B, C, D. So this is Al, and this is Betty, and this is Carl, and this is David. I don't know. So these are all different people. And so each one, it shows how much they had earned year to date going into this payroll and how much they earn now. So you add those two together. So that means after this payroll, for instance, Al here will have an ending cumulative 87.3. And we can see that's not near any caps. So Social Security, so this right here is the gross pay, okay, for this pay period. So 6.2% of the gross pay of 4,300 means I'll have to pull out 266.60 for Medicare, for Social Security, 1.45% for Medicare, so 1.45% of this gross pay. So 4,300 times 1.5 is 62.35. And then the income tax, remember, would have been determined by what this employee has on their W-4. And the company probably has payroll that has all this, like software that has all this logged into it. So it knows how much everybody has coming out for health insurance and what they've pledged to United Way, and what's going in for income tax, based on their W-4 and all that kind of stuff. So then you just add all these together to get the total withholding, which for this guy is 1,294. Oops, that's not up here either. 1,294.95. So then the net pay is the gross minus the total withholding, or the total deductions. So for this guy, it's the 4,300 gross pay minus 1,294.95 in deductions. So that is 3,005.05. That is their that's what we put in the payable column, and this is what we put in the expense column here. But this again is the gross. This is the net, or the take home. So it's really the same things we had on our journal entry, just in a different format here. So this becomes the 4,300. And we would do the same thing for everybody. Now this one here for Betty is interesting because we can see what she had going into this pay period plus this pay period brings her up to 118,700, and that is over that Social Security cap. So her entire pay is not going to be calculating Social Security. So if we say the cap was 117 and her previous earnings was 110,900, that means that 6,100 of this pay is taxable for Social Security. So the 6.2% isn't going to be on the whole 7,800, it's just going to be on 6,100. So if we take that times 0.062, we get Social Security tax of 378.20. So that's what goes here, 378.20. Next pay period, her Social Security tax will be 0 because she will have been well past that. So none of her income will be subject to Social Security. And so then we just kind of keep doing the same thing. The 1.45% though is of the entire gross pay here. There's no cap on that one, so that comes out to 113.10. Add all those guys up together, and Betty's total deductions or total withholding is $2,222.30. So her net pay is the 7,800 minus the total deduction, so she gets to bring home $55,77.70. And then again, this just shows the gross pay again, which is $7,800. And so you would do that for all of them, and you would end up getting something that looks like this. It's a little bit easier to read than mine. And so here's the total gross pay right here, right? Or we see that same number over here. That's the total gross pay. This is the total net pay. And then this is the total that I withheld out of Social Security, Medicare, federal income tax, health insurance, and United Way. So those are all my withholdings. So those are the numbers I need to do my journal entry. So remember, I debit the expense, so wage and salary expense, and I debit that for the gross pay. So that's $24,200. Then I've got all these payables. So I've got SDI tax payable, and the total there is $13.95. And then I've got Medicare tax payable, so that's $350.90. Then I've got income tax, so federal income tax payable, $48.40. And then health insurance, which is $484. And United Way, which is $70. And then the last payable will be the wages and salaries payable, which will be for the net pay $17,060.10. And then my debit should equal my credits. Remember, that's to accrue it, and then you'd have to turn around and pay it, so you debit all the payables and credit cash to pay those out. And remember that, like these United Way things, these aren't expenses to the business. This is just what the business is taking out from the employee's checks and then forwarding on to somebody else. But then the next thing it asks us to do is the employer part of it, the employer taxes. So remember that whatever the employee owes for Social Security and Medicare, that's what the employer owes too. So we don't have to refigure those out. They're already figured, and they're also totaled on our payroll register for us. So for the employer part, we will debit payroll tax expense, and these are expenses to the business. So the business has to pay the actual salary plus all these expenses. So we'll have SDI tax payable, and again it's going to be the same amount, so that's $13.95. And so you can see we put $13.95 in that for the employee, and then we put $13.95 in for what we owe. So the two together is how much the employer has to pay to Social Security when they have to file that. And the same thing with Medicare. So with Medicare, what they'll have to pay is what they took out for the employees, the $350.90, plus $350.90 for themselves. So that's how they kind of split it. And then we have the FUTA and the SUTA. And we know that this is 0.6% and this is 5.4%, but it's not on the total payroll. It's only on the first $7,000 that each employee earns. So we can see this person passed that a long time ago, this person, this person, this person, all passed that a long time ago. It's just this last guy who just started. So his whole income is subject to the unemployment tax. On the next pay period, again, it's only going to go up to $7,000. So you can see that on the next pay period, $1,500 of what he earns will be subject to unemployment. And then after that, we won't owe any unemployment on him. So each of these, it's going to be of the $5,500 times $5,500. And so this comes out to $33 here and $297 here. So you add all those up together, and the total payroll tax is $2,075.90. So you can see that unemployment is really, you have to look at each employee individually. to figure out what you owe. So in a lot of the homework problems, you'll just see the total payroll was, $112,000. Of this, $3,000 was subject to unemployment tax. And so you just take the amount you have times those percentages. So that's the unemployment. The rest of the liabilities I'm skipping, so the warranty stuff and all that, I'm not doing that. Take a look at the ratio at the end. It's times interest earned. I think you can, it's pretty straightforward, so you can figure that one. But other than that, the rest of the chapter I'm kind of ignoring. So that's it, and this was your last video, and now you're all ready to finish this homework and take your exam, right? Okay, good luck.